Hello traders, how are you doing today? I want to take you through a very simple and easy way of how you can be making your cash in derivative trading. And here you only need to concentrate with one candle, which is the daily candle, okay? So for those who are new, this is where you will be learning how to take your trades depending on the kind of time frame you're using, but definitely here we are dwelling on a daily time frame. Then we are scaling down to H4, H1, and we execute in 30 minutes time frame. So this is a very nice platform. If you want to learn how to trade, just feel free to subscribe and click the notification bell so that you don't miss every day we post. And you can also join our free Telegram channel where we post the setups when they are ready, like this one, which I'm trying to explain to you now. It's ready and we have just executed this. So this is a very, very bullish market. This is DEX 900 up index, and being called DEX 900 up index, it means that it is favoring most of bullish setup because it's a volatility index which mostly spikes up, always going up. So here, this is the candle we are going to use. Let me show you with an arrow. This is the candle we are concentrating with. This is yesterday candle, and this is the bullish momentum we are going to go up with. Though the day before yesterday, this was a pushback or a pullback. Price was retracing after breaking this zone over here. If you can clearly see, this is a zone, okay? This is a structure with which this blue bullish candle broke, and immediately it broke this structure. That is why we had this pullback. Every time we break a structure, we definitely going to have a retest of the zone after price has gone up. So that is also very important for you to master when you're trading. You need to know that every time a market breaks a structure, it will definitely going to do what? To retrace. So it broke this zone, yeah. And when I talk of a zone, there must be a red and a green candle together, okay? That is a zone. This is a zone which is not that huge compared to this one here, okay? Why are we saying that? Because this zone, the market has tried it for the first time and it was broken. This one has not been retested again. So this zone market broke it and retested, and now we are going back up. So what happened when the market opened early during the day today, depending on your local time? Like here in Kenya, the market opens at 3 a.m. in the morning. That is when the market opened, and we had this candle here, which was now the yesterday's candle had closed. Then we had this. So what happened when you wake up in the morning? What I do when I wake up, I do my morning prayers and I do my exercise. After that, I just check how the market has closed. And then I put my rectangular box like this. After I've put this one, what is important for me is just now to do what? To wait for price to do what? To break above this box, okay? To wait for price to break above this box. In which time frame? In H4, okay? Now we are at daily time frame, but when you are waiting for price to break, you go to which time frame? H4. So we are going to scale down to H4, and when you check on your H4, that is 4-hour time frame, meaning this candle has taken 4 hours to completely form and close. It took 4 hours. So you can clearly see that this candle here, which has just closed, like right now it's at 3, it's 2:38. So this new candle is going to come for H4, which has not yet closed here. This one is going to close. but this one was for 11 a.m. It closed. After it closed, it broke above our box. After breaking above our box, and we have said when it comes to trading, every time we have a BOS, we will definitely have what? A break of structure. We are going to have every time the price breaks. I'm trying to type here, but it's not going through. Every time we have a break of structure, the market will do what? The market will have a retracement. So that's why you are supposed to wait, okay? So break of structure will get us to retracement. After the retracement, that's when you do what? That's when you do your entry, and your entry should be done at a favorable zone. What do I mean by a favorable zone? When now we go to H1, you will see price has pulled back until at this zone. Let me show you with this arrow. You see this pink line here? I don't know if it's pink or purple. This is our 50 EMA. This 50 EMA is very important. This is what I use for my entry. After price has break my box, I give it some time to pull back. That is the retracement. It has break above, it is going to retrace for me. I have to wait for it until it reaches this zone. Then I do what? Then I go up with it. As simple as that. So this is a market which is now ready for entry here at this zone, okay? We buy at this zone where we have our 50 EMA, and use the smallest lot size, because the indices, they move so fast. Like this one, the smallest lot size is 0.10, you buy, okay? So our entry is right here. And then your stop loss, you should put your stop loss below that 50 EMA, okay? Can either put it exactly here, but definitely you have to give your trade some breathing space, like right here. Okay, so 31.93, that should be your stop loss. And then where do you get your TP? How do you get your TP? You just measure the distance of this box and take it up. That was yesterday's candle, this one here, and you carry it up. So you have two areas of taking your profit. You do partials, you take half of this. Okay, when you put your cursor here, you can clearly see the half area. So this is the half zone. You just adjust it accordingly. So this means that this market, after retracing this zone, it's going to buy all the way up here, okay? And that is the half. Half is very important. You concentrate with it. That is where you take your profit. And if you must go higher, you can just use the 50 EMA here to take your profit, okay? Don't wait all the way up here. Sometimes market never reach here. Sometimes it pulls back down to this zone. So this is where our entry is, and we are going to target the half as our TP. And we have said, how do we get the half? You just put your cursor here, and you'll see this dot. That is where you put your horizontal line for your TP. So this is a very nice trade, which is going to give us good profit today, because it's a bullish market and price has break out of our daily box using this previous candle, which was for yesterday. And then we are going to target half of that distance. That is very, very simple analysis. And if you're interested to learn more, you can just inbox me or you can WhatsApp me, and I can teach you via Zoom on one-on-one just for $50. This is a very nice trade which you can take and you can make some money. Please kindly subscribe to this channel so that we can grow together. Every time I post an analysis like this one, you can always get it on time. just make sure you click on the notification bell so that every time I post a video, you will have it on time. Thank you so much for your time, and thank you for subscribing, and let me see you on the next one. Bye.